Good evening. This is the Elliott wave update for the S&P 500 for Thursday, June 16th, 2022. On Monday, the markets are closed as it's a federal holiday. It is Juneteenth, but the markets will be open for Globex on Sunday afternoon, from my understanding. And then again on Monday for Globex. So I will check in with the market and see after Sunday's opening, just to take a look to see what's going on. And then if something big is happening, then I'll make an update quickly then. But I also, if not, then I would wait till Monday. And also then at the opening of that Globex session, I will make the update for Tuesday. In any case, today, the market basically just had a continuation to the downside for the better part of our session. In fact, for the entire session. I've made a couple of changes to the labeling for the C wave, and then the labeling for what now is being counted as minor wave 5. So this is what we're currently in. Previously, I had been anticipating or labeling this as minor 1 and minor 2, with a very large drop staring us right in the face. Since I've gone back and I've reassessed the move as to its position and where we are within it, and felt it is more, it does work better with an AB if we're in that C wave, that it still can be very strong, which it is, and get us down to levels where I believe it could, and then stop to complete that primary degree A wave. So just to kind of go over how the sequences are going to go or should unfold, we will be completing an ABC on an intermediate degree level, which would form then the primary A wave. The primary B wave would then consist of an ABC structure. And then there would be primary C wave, which would be down, and that in turn will form the cycle A wave. And then from there, we will do the same type of deals. We'll break into each layer all the way, and then until we get back up and finish this up on the super cycle degree. In any case, here we are. Now, so the labeling here is I moved the minor 1 and 2 back to a position where I've had them before. And then the subdivisions 1, 2, 3, 4, 5 for minor 3, and then put minor 4 here. And so dropping it down to the hourly chart, we would then be in that minor 5th wave down. Again, now I'm going to keep them as alternates, each with a solid probability. The market continues to tell us, I am not telling the market. So my interpretation would be that this seems to fit. And again, but much is going to unfold, and we're going to get even additional clues after tomorrow, simply because it is a quadruple expiration. And the last one was in March, and it was $3.2 trillion. This is supposed to be 3.6. So it's a lot of money settling. And we've already seen what takes place when you start dropping through strike prices. And now we started it again today. And for me, most prevalent that I saw it was in Apple. Apple is a huge retail stock. It's a huge traded stock. And today, the stock traded well over 100 million shares. And you have to consider that's all to the downside, pretty much. And slid through an additional, I think, at least 135, 37, 35, 36, 34, 33, 32, 31, 30. And then it actually, I think, went below 129 or got into the 129s, and then ended up closing at 130. So that's sliding through all of that. And there's a lot of adjusting that needs to take place when that occurs. And that's just one stock. Adobe's earnings, they came out, they disappointed in the after hours. Adobe was, I believe, down. Let's just take a quick peek. 355, it actually recovered, so it's only going to be down $9. It was trading below 350 earlier when they first reported, but then again, we'll see what happens tomorrow. So we have, again, Adobe, I don't believe is a part of the S&P, but it is a part of the NASDAQ, and so goes one, so go they all. So we need to just kind of keep focus on what's happening. So what I have done internally within this, what now I'm counting as a minor fifth wave, or alternately can count as a minor fifth wave. So we're just going to go with the flow of what is taking place. So I have moved, the 3 was here and that was the 4, and this was the 5, and then the minute 3 was underneath it, and this would have been minute 4. Well, I believe that after today, there is additional, much more additional to come within the context of the minute 3 versus a minute 5. So I moved the 3 over to here and put the subminute 4 here. Actually, and it doesn't belong there. It belongs right here. This is actually the high, and these were huge tails during the interest rate debacle yesterday, up and down and all around. So I put the 4 here, and that to me is the more legitimate high. And then from there, we start to count down. And I'm going to open this up so we can see inside there. If this is the 4, and I'm going to do it again because it's in the wrong place, it's this one right there. That, you see, these two are equal. So right there. And then I'm not going to share and think this is a 1 or 2. So if anything, 1, 2, 1, 2, 1, 2, the way it's lining itself up, if indeed this is it, it's the same thing I'm seeing in the NASDAQ, is it kind of falls off a little bit of a cliff. So remember, big expiration, a lot of things are going on and a lot of adjustments have to be made. Period, no matter what, because prices are going to be swinging because the market is swinging. So whether they're running it back up or running it back down, adjustments need to be made. So there should be plenty of trading in both directions, and we're just going to have to see how it goes. The way the charts are left right now on the hourly chart, it doesn't bode very well. We may see some additional upside. It may try to get itself back above 3,700. But I think eventually it just turns and it starts moving lower again because I can't put a completion on this in terms of counting it down as 5. So I need them to be clean, and they're not. So that leaves open a pretty strong potential of getting to 36.23 for starters, and then we have 35.56 underneath that. Break below there drops it into what I've been calling a black hole. Reason being, and I'll take this out to the daily. The reason being that when we break here, look how far I'm already out to, oh, that's all June. So I was on the daily. What's this on the daily? And to June of 21. So I'm going back a year and there's nothing. So we have to go back out to the weekly chart to find our price points. And we are back out into 2020, November of 2020. And there isn't anything of any strength. We're down here past that next zone. So if we break 35.56 and we start to drop again, we're into that black hole, and that's the next level, 33.80. Can it do it? Sure. We were tumbling. We were down over 100 points today. We closed down over 100 points today. So yes, it can be done, and it can happen. And will it constitute a bottom? I don't know. I have to see when we get there and see how it forms. I'll tell you what I would be looking for to cement a bottom into place is more of a V. So lately, all of the internals here, the bounces are all 3s. This got a little bit crazy, but it was an interest rate. There was news, but it still ended up being just a big crazy 3. This was a 3. These are 3s. These are 3s, all the way down. And if that continues to be the case, as it is, then the trend, the downtrend remains in place. So what I'd be looking for is a quick 5 in a V, in a like boom, coming off a bottom. And what's going to trigger that? I truly can't say at this point. I think it would be that just the market just feels that's it, and then we go. And it may not happen until after expiration. I, again, do not know. So here's where we sit. And so for tomorrow, continue to allow downside, continue to allow for a drop to 36.23 and for a break there and a possibility that we drop into this smaller little black hole, but we should have some support in between these lines. But 35.56, the one down there on the bottom, that's the one that a clean break there puts it into danger to be a little bit more into free fall. But then again, that's what we saw here when it broke 37.92. Broke that low, just kept going. And that's what I would suspect as we continue to break these support zones, these support areas, that's what it'll result in. Additional drops, additional adjustments, et cetera, et cetera. And that's the name of that tune. Now, upside for right now, again, what I'd be looking for, it needs to get itself above the 8, solidly above the 8, not just go up, give it a test, fool around, and then drop again. And then it needs to get itself above the 20. And right now the 20 is at 37.08. And V-like and form 5 waves. Clean 5 waves on the hourly would be nice. That's going to give us a pretty clean sign. It's like, whoop, we're out of the woods. We're at least going to do 5 up, 3 down, and another 5 up. And that being the case, it would be a nice move and be more conclusive that we've reached a near-term bottom. So keep all of that in mind. Again, tomorrow expiration could be nasty. Take it as it comes. And if it decides to move up and do a big recovery, fine. It'll be very tradable. That's all I'm going to say. So again, I'll be checking in on the markets after Sunday's Globex opening. If not, then I definitely will be on Monday after Globex begins, and there will be an update for sure on Monday, the 20th. All right. Have a great long weekend. Enjoy the holiday.